Limited Q4 and FY25 earnings call hosted by IIFL Capital Limited. At the outset, I would like to clarify that certain statements made or discussed on the conference call today may be forward-looking in nature, and a disclaimer to this effect has been included in investor communication shared with you earlier. As a reminder, all participant line will be in listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now like to hand the conference over to Ms. Disha Arora from IIFL Capital Limited. Thank you, and over to you, ma'am.
Thank you. Good afternoon, everyone, and thank you for joining us on Deepak Nitrite's 4Q and FY25 earnings conference call. Today we have with us Mr. Maulik Mehta, Executive Director and CEO, Mr. Sanjay Upadhyay, Director of Finance and Group CFO, and Mr. Somsekhar Nanda, CFO of Deepak Nitrite Limited. We will begin the call with opening remarks from the management team, followed by an interactive Q&A session. To begin, Mr. Maulik will share his views on the operating performance and the growth plans of the company, followed by Mr. Sanjay Upadhyay, who shall take us through the financial and segmental performance. The result documents have been shared with you earlier and also have been posted on the company's website. I now invite Mr. Mehta to share his opening comments. Thank you, and over to you, sir.
Good afternoon, everybody, and welcome to Deepak Nitrite's Q4 and FY25 earnings conference call. Earnings documents were shared with you earlier, and I trust you've had a chance to review them. FY25 was a challenging year for the entire chemical industry, marked by significant external headwinds, a global slowdown in demand amplified by geopolitical tensions and macroeconomic uncertainty, and a wait-and-watch mode in the face of tariff ambiguity has meant that supply couldn't be fully absorbed, placing pressure on prices of chemical intermediates. Additionally, intense price competition, particularly from Chinese producers who have been aggressively placing supplies, exerted further margin pressure for Indian manufacturers. Amongst these headwinds, domestic demand served as a vital cushion, showing early signs of stabilization and recovery in almost the entire range of industry applications. This resilience was supported by our continuous focus on cost optimization, digital transformation, and an endeavor to capture niche demand through product variants and new offerings. Given this operating framework, we've reported a resilient performance in FY25, where we focused on further strengthening our business model through key initiatives aimed at improving both productivity as well as profitability. Record production volumes were achieved in several products through process optimization initiatives, debottlenecking efforts, and capacity augmentation, all of which have served to enhance operational efficiency. Cost optimization has been achieved by process recalibration. Simultaneously, we expanded our product portfolio and secured long-term contracts, positioning ourselves for consistent and sustainable growth. As we look ahead to FY26 with several projects commissioning on the horizon, we're confident in our ability to deliver an improved growth and profitability scenario. We have also started gaining benefits from renewable hybrid power arrangements, which will encompass almost 60% of our total consumption by the end of next year. For the fiscal year ended March 31, 2025, Deepak Nitrite reported a total income of 8,366 crores, growing 8% over the previous year. This growth has been achieved in the face of significant headwinds, and our teams have expended considerable effort to debottleneck facilities, augment capacity, and develop new products and variants, as well as seeking out additional customers and non-core markets in order to achieve the growth. As you're all aware, product pricing remains subdued for most of the fiscal year. In this context, we've delivered a consolidated EBITDA of 1,176 crores, almost at last year's level, despite these challenging environments. Here, too, I would like to commend our team for undertaking these optimization measures process recalibration, and delivering increased production volumes of key products. We reported a profit before tax of 953 crores for the year and profit after tax of 697 crores. While top-line growth was driven by volume, which helped offset the impact of lower realization, profitability was affected by several factors. These included elevated input costs, overall slowdown in certain segments like the agrochemical industry, and some customer-specific challenges. We are confident that we will be able to transition towards a normalized level of profitability during the financial year. Following a subdued Q3, we indicated an expected improvement in Q4. Our Q4 performance highlights include a total income, this is, by the way, for Deepak Nitrite standalone AI business. A total income of, this is the entirety. A total income of 2,202 crores, marking a 14% sequential increase and a 3% rise on year-on-year basis. EBITDA increased to 339 crores, a 79% increase on a sequential basis and a 6% increase on a year-on-year basis. PBT more than doubled on a sequential quarter basis to 279 crores, an increase of 106%. PAT of 202 crores is also a 106% increase on a quarter-on-quarter basis. In Q4, we achieved record production and sales levels across several key products. This was driven by capacity augmentation, debottlenecking of select facilities, and process optimization initiatives. These contributed to strong volume growth. For the quarter, domestic sales accounted for 82% of revenue and export contributed 18%. Well, now for the segmental performance. Advanced Intermediates in the quarter recorded revenues of 654 crores, reflecting a 19% sequential increase. For the full year, the segment reported a revenue of 2,527 crores, representing a 7% year-on-year decline. The quarter-on-quarter recovery was driven by strong performance across multiple product segments, which effectively met evolving customer requirements. While demand for dyes and pigments has improved from Q3 end, pricing pressure persisted. We're actively addressing these challenges through targeted initiatives aimed at improving competitiveness and margins. As previously indicated, agrochemical demand continues to be subdued, a trend that we expect to persist for the next couple of quarters. Nevertheless, we remain focused on prioritizing the production of high-demand products and strategically expanding into non-core markets that demonstrate consistent or growing demand. Our strategic roadmap also includes a downstream move in certain applications with marginal investments along with industry-leading ESG targets. Looking ahead, we are expanding our portfolio with new product offerings and variants supported by new customer acquisitions, which we believe will drive a revival in growth for the segment. The new products will also serve customers in the pharma and personal care segments, as well as high-impact industrial solvents and energy applications. Phenolics. In Q4FY25, the Phenolics segment reported revenues of 1,532 crores, reflecting a 12% quarter-on-quarter and 5% year-on-year growth. For the full year, revenues increased by 16%, reaching 5,805 crores. This growth was underpinned by the debottlenecking and capacity augmentation initiatives, which enabled us to set new benchmarks in the production and sale of key products. While the market absorbed the increased production volumes, a temporary rise in imports which started in Q3 impacted product pricing while we had taken an annual shutdown. Looking ahead, we anticipate an improvement in market conditions, coupled with softening input costs and supported by enhanced operational efficiency. As far as project updates and the future outlook is concerned, while some of our projects experienced delays, these spillovers from FY25 have created a robust and exciting project pipeline for FY26. By the second quarter, we anticipate a commissioning of our state-of-the-art R&D center at Savli, Vadodara. This involves over 100 crores of capex. This facility will give a better structure and impetus to our R&D program while significantly enhancing our innovation capabilities. We have already commissioned a facility which is focused on compounding, which will go into applications which are multiple in nature, from electric switches and EVs all the way to medical devices. And this compounding facility will dovetail very nicely once we have our polycarbonate resin manufacturing set up. The nitric acid unit will be commissioned towards the end of Q1, early Q2. And this is a critical upstream integration which will help improve reliability, reduce costs, significantly improve sustainability scores, and allow us to capture a greater share of the value chain. Expansion projects across key chemistries, including nitration and hydrogenation, are set to be commissioned too, building on the successful commissioning of the fluorination block in Q4FY24 and a recently commissioned chlorination block. By the second half of FY26, we expect to commission the MIBK and MIBC project, which are downstream derivatives of acetone. These will help enhance an integration and support value-added growth. We're also executing a major transformation in our energy consumption mix, with the goal of transitioning 60 to 70% of energy consumption to renewable sources in Gujarat and Maharashtra. This shift is projected to result in a 60% reduction in carbon emissions, aligning with our broader sustainability goals. To address challenges relating to intermittency, reliability, and infrastructure integration, we're targeting an optimal blend of renewable energy sources. This helps bring in sustainability in operations, apart from yielding significant reduction in total cost. As a legacy, the company has been rewarding shareholders by way of handsome dividends. So has it this year. Mr. Upadhyay will take you through the details of the dividend process by the board of directors. As far as strategic outlook is concerned, this is probably the first time and maybe the last time, I hope, that we're not going to give a sharp guidance about the next quarter, this quarter and the next quarter, owing to geopolitical uncertainties. But we continue to remain confident about an optimistic growth in our full year projections. Now, what started out as an investment thesis and an aspiration has now become a well-accepted industry byword. Make in India, make for the world, as most companies embrace the concept of nearshoring. Deepak is entering a transformative phase, marked by the commissioning of fully integrated facilities that will significantly enhance operational resilience and profitability. In an increasingly volatile global environment, our strategy of backward and forward integration ensures that we can better serve end consumers while enabling our commodity and specialty businesses to support each other. This year represents a renewed commitment to building a new Deepak, with project execution gaining momentum, technologies being finalized, and promising partnerships emerging in the field of material sciences. Our growth roadmap includes the development of upstream products like nitric acid, as well as downstream derivatives like MIBK and MIBC, which are set to become operational in the coming quarters. A major highlight is that the Deepak Chemtech board approved an investment of 3,500 crores for new capacities in phenol, acetone, and IPA, which will be integrated into the production of polycarbonate resin. Combined with the earlier 5,000 crore approval, the total investment in the PC resin project, starting from phenol and acetone, now stands at approximately 8,500 crores. Once commissioned, Deepak will become one of the world's largest single-location producers of phenol and acetone, with over half of this capacity set to be converted into higher-value derivatives like bisphenols and polycarbonate resin. In conclusion, FY25, and particularly the strong recovery in Q4, exemplifies Deepak's operational resilience and the strength of its strategic initiatives. Despite ongoing global volatility and pricing pressures, We achieved volume growth, strengthened our market footprint, and advanced critical integration projects. Thank you for your continued support and trust. We look forward on building on this strong foundation in the coming years. I'd now like to hand over the call to Mr. Sanjay Upadhyay.
Thank you, Maulik. Good afternoon, everyone, and thank you for joining us today on Deepak Nitrite's earnings call. I will now take you through the key highlights of the financial results for the fourth quarter and full year ended March 25. In FY25, we recorded a considered revenue of 8,366 crores, reflecting an 8% growth over 7,758 crores in FY24. EBITDA stood at 1,176 crores, marginally lower than 1,199 crores in previous year, with EBITDA margin at 14%. PBT was 953 crores and PAT came at 697 crores. You all are aware that we have a strong history of proposing and distributing dividends. In order to carry that vision out of our management this year, also the board has maintained dividend of 375 crores amounting to 7.5 rupees per share. We hope this offers an opportunity to be rejoiced by the shareholders who have placed immense trust in us. We are thankful to the shareholders and believe their unwavering trust in us and shall take us to the greater heights. After a relatively muted Q3, we closed the year well, delivering 14% quarter-on-quarter revenue growth, led by recovery in advanced intermediate segment. As Maulik highlighted, we witnessed encouraging demand revival across several key products in the portfolio. In the phenolic segment, we achieved higher volumes across all product lines. However, the pricing environment and crack remained soft due to increased imports as well as the higher raw material prices. In Q4, consolidated EBITDA rose sharply by 79% quarter-on-quarter to 339 crores, supported partially by the government incentive. So government incentive is a part of the business. I mean, there will be some questions on that. It's a part of our regular income, because incentives are there for 10 years, which we get. Of course, this figure is high because of the accumulated 161 crores. But normally we get around 60 to 70 crores every year. And we are booking on a cash basis, but it has to be actually, we can, on an accrual basis, we get around 60 to 70 crores every year. So hope I have answered that query from the investors. Q4 has been a challenging quarter, persistent weakness in pricing. Nevertheless, we believe our initiative towards capacity augmentation, debottlenecking and cost optimization are aimed in the right direction. While the outcome of these initiatives has been nascent in Q4, we are confident that as we move forward, strategic actions we have undertaken will further strengthen our recovery trajectory and drive improved profitability in the upcoming years. On the operating front, domestic business revenue stood at 1,096 crores in Q4 and 6,849 crores for the FY25. Export came at 384 crores in Q4 and 1,432 crores for the full year. The domestic to export mix of FY25 stood at 83 to 17 on a consolidated basis. Moving to now segmental performance, in the advanced intermediate segment, revenue increased by 19% quarter-on-quarter to 654 crores in Q4 FY25 from 552 crores in Q3. With EBIT at 45 crores and margin at 7% for the full year, revenue stood at 2,527 crores with EBIT of 136 crores, reflecting 10% margin. Deepak Phenolics posted a stable performance with Q4 FY25 revenue rising 12% sequentially to 1,532 crores from 1,366 crores. EBIT came in at 239 crores with a margin of 16%. For FY25, revenue grew at 16% to 5,805 crores and EBIT stood at 783 crores, translating to a margin of 13%. On the balance sheet front, the company continues to demonstrate financial strength with consolidated net worth of 5,425 crores and standalone net worth of 3,126 crores. We enjoy a well-fortified position to undertake a planned upstream and downstream expansion, which has been covered by Maulik in his remarks. We are making notable progress with our growth initiatives. Led by a strong R&D foundation, we are developing different products to enhance our specialty chemicals portfolio. This new capacity will improve self-reliance in critical raw materials and support margin expansion as they become fully operational. Our new R&D center near Vadodara, with an investment of little more than 100 crores, is set to be commissioned shortly, and this will reinforce our innovation-led growth strategy. In conclusion, while the past year presented external challenges and will continue to face external challenges in current year also, our outlook remains strong and positive, with a solid pipeline of projects set to be commissioned during the year. Though the numbers will be it will not be annualized number because most of the projects are getting commissioned in phase, let's say Q1, Q2, Q3, Q4. But we are looking at a very bright next year with this whole projects getting commissioned next year. Deepak Group is well positioned to deliver sustainable growth and long-term value for all stockholders. With that, I would now request moderator to open the forum for question answer.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. First question is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir. Thanks for taking my question. First, I want a clarification. Maulik bhai, you said in your opening remark that we are looking at few downstream product in agrochemical, moving up in the value chain. Second, you spoke about the new product which will have application in agro and pharma, and probably another for industrial solvent and energy. Can you give us the little bit more color on this product and what is the capex we are looking at expansion of these products?
Okay. So first of all, thank you for the question. These products will not really have any meaningful capex, maybe other than some balancing equipment or something. And most of these will be utilizing assets that we already have in campaigns. So while we have a base load and a foundation of some intermediates that we make, we've partnered with certain downstream customers where we would run these products as a value add in certain campaigns. I think every month there will be a campaign. It will swing between the base load of products and the higher value accretive products. Now, when we go downstream in agrochemical intermediates, here also the focus is to do it in a very strategic manner because traditionally we have always focused on making intermediates and not really technical. So when we're doing that along with strategic partners. And as far as what I mentioned about the personal care, this again is going to be it is going to be an asset valorization, but B, it is also going to fundamentally add a brand new chemistry to our product portfolio. Just for the record, this chemistry is one that's called Fiddlecraft.
Can you come again? What chemistry is it?
It's called Fiddlecraft.
Fiddlecraft.
Sorry, these are German names. I think that's two scientists who created this chemistry many, many years ago. But it has a broad range of applications. And over a period of time, it will actually also feed into the polycarbonate resin as a major application. But right now, the priority focus will be into personal care and pharma.
Very clear. That means because we were running very efficiently plant, this means we will have more value from the same plant rather than more volume. Is that will be a fair statement?
So while that answer is yes, we have a mixture of high efficiency, continuous operations plants. For example, the phenol plant, for example, the sodium nitrite or the nitratoluene plant. But we also have a very broad range of batch plants, which are very well instrumented and able to have a very large number of chemistries that we're able to use in those assets. So these are assets which will be used to make these higher value, relatively smaller volume products. And some of them will include assets such as our fluorination block. Some of them will include assets which we would otherwise have used for some other chemistries. So the high efficiency single product plants will continue to run in that manner in order to gain the base load of efficiency. And the other assets which are batch will be used to generate higher value, smaller volume, margin accretive products.
Very clear, very clear. Now, shifting there to the standalone business this quarter, I think we had a good run on the agrochemical sequentially. But if I look at incremental gross profit to an incremental revenue, that's only 37%. That says that we are still facing some margin pressure in the underlying core product, even in the Q4. When we say that margins have stabilized, are they stabilizing at a Q4 level or at a Q3 level?
No, neither. Even Q4 is softer than it should be. But I'm not going to give any opinion about what Q1 and Q2 will be because, literally on a daily basis there are, news that come out that completely shatter your perception of what would be a normalized situation. So I would rather say that, we're confident about coming back to a normalized number, which is which is higher than the Q3, obviously higher than the Q4. But I would say that this will be achieved on the annual number rather than on a base of Q3 or Q4.
That's very helpful. But can you throw some light on what's really happening? It's a demand side issue in China or it's oversupply situation in China. What really is driving sudden spurt in competition in our product, which till now has been doing quite well even in the worst of the situation in FY23? In FY24.
So generally what has happened over the last several years is that there has been a significant overcapacity that has been built in China. Along with that, a lot of the agrochemical intermediates that Deepak manufactures has a very large application base across the world, but has been largely dependent on only a small handful of customers. Now, as these molecules go through a process where there is a patent expiry, the number of customers increases, and for a short period of time, so does the number of potential competitors. So Deepak has been focusing on ensuring that it is building cost leadership as well as ESG leadership. Now, there is always going to be a period of time in the middle when you're essentially competing with someone's finished good inventory. It's easy for Deepak to compete with anybody at a global level when you're talking about manufactured products. But when you're competing with somebody's closing stock, which is depleting at a pretty rapid clip, but you still have the tail end of it there in the market, the competition becomes uneven. To be honest, we are actually quite well aligned with a lot of other players who say that the down cycle of agrochemicals is teetering over to the end. You have certain players who are forward integrated into the formulation, who are able to tell you that the future is much brighter because they're there with it. We follow suit maybe with a lag of 1 quarter or 2 quarters. But we are well aligned that moving forward, the situation is not as grim as it was in FY24-25 with regards to volume recovery as well as over a period of time price recovery.
Great. I have one last question. I'll get back on the queue for others. How is the market scenario for...
Sir, can you please rejoin the question queue for follow-up questions?
That's fine. Thanks, Maulik Bhai, for answering all those questions and best of luck for coming quarters.
Thank you.
Thank you. Ladies and gentlemen, In order to ensure that the management is able to address questions from all participants in conference, please limit your question to only 2 questions per participant. Should have a follow-up question, we request you to rejoin the queue. Next question is from the line of Neera from Anvil Wealth. Please go ahead.
Yeah, sir, thanks for the opportunity. So I have 2 questions. So, first is on the commissioning of our nitric acid plant. So when we see the other players in the industry having the capacities of nitric acid, they are integrated in terms of their upstream ammonia, whereas probably we have to purchase ammonia from the outside to support our nitric acid production. So just wanted to have your thoughts here that because we need to purchase it from the outside market, how we would be competitive vis-a-vis those players having their captive ammonia, and also if you can talk about in terms of the OPEX difference between us and them over a period of time.
Okay. Hi, Neerav, and thanks for your question. Just to clarify, look, Deepak Nitrite has been in the business of consuming ammonia now for 54 years, right? We started off with sodium nitrite, which is a consumer of ammonia. So our ammonia purchasing pipeline, both from domestic as well as international sources, is relatively robust, and it can be made more robust with some marginal investments here and there. So look, we don't compete with manufacturers of nitric acid. Our asset is in place for us to consume internally. So our products that we make, while nitric acid will be made, our products will be downstreams of nitric acid. And those are much higher value in a sense of multiple end application, domestic and international demand. In fact, in a couple of places, we have tied up a large portion of our production for multiple years with formula-linked pricing, which includes movement of feedstock as for example, ammonia. So moving forward, I don't see us as trying to benchmark against nitric acid producers who have their own ammonia. I look at benchmarking us against nitric acid consumers who purchase their own nitric acid, whereas we will continue to purchase and expand our purchasing policy for ammonia.
So, Neeraj, to elaborate this, this is a make or buy decision. Okay, it has nothing to do with the market. So, if you have, and then secondly, the certainty of supply and through pipeline. These are the major components one has to look at. It has, we are not competing with anybody. We know they will be far superior than us. But assured supply, pipeline supply, cost as compared to market will be much lower. Paybacks are better, quite good, in fact. So this is what goes for a make or buy decision, not as compared to how they are doing and what they are doing. How efficiently we are doing is more important.
Correct.
So hope we have answered your question.
Correct. So just one thing here. So last quarter you mentioned that probably we would have our own storage tanks also for ammonia. So how that is progressing and when that could be commissioned, because now nitric acid facilities are getting commissioned in Q2. So if you can share something on that storage tanks, that would be helpful.
So what we've done is we have we've already made investments and commissioned investments about storage of nitric acid as well as unloading of nitric acid to have a much higher rate of consumption on a steady basis. We have also invested into expanding our storage to allow us a greater degree of flexibility and then take that ammonia via pipeline into our consumption sites. So that is, I won't say that is a significant investment, but that should also be operationalized during the year.
Got it. The second question is
to ensure that we have a strategically de-risked ammonia sourcing strategy.
Got it, sir. So the second question is in terms of the input prices, like some of our major raw materials like toluene, octanol have seen a price corrections from March onwards. So just wanted to have your thoughts here, like have the product prices being adjusted commensurate with the fall in these raw material prices, or we would have some extra delta left with us to work with? Given the kind of commentary what we have seen in your investor presentation, like you have mentioned that we are seeing a kind of demand revival in dyes and pigment segment. So if you can relate all this with reference to these raw materials as well as your outlook for DASDA OBA for FY26. Thank you so much.
Sure. So, look, Nirav, as you mentioned, there is, price softening of key petrochemicals like benzene and toluene and such. Now, because we are intermediates manufacturers, we are also present in multiple parts of the value chain. For example, my OBA prices do not move in line with toluene prices. Right? So in some parts of the business, when we have a contractual agreement with customer for an intermediate, we have a formula with a pass-through clause, which may have, in some cases 1 month, in another case it is a quarter, where there is an adjustment to the price of the product based on quarterly average movements. In other places, it is linked to the market price. So when I am selling optical brighteners, nobody really asks me about the price of toluene and how its downward revision would improve my OBA prices. So there it is about being able to secure long-term customer contracts. And as you've mentioned, OBA, we have debottlenecked our optical brightener manufacturing capacity. We've also launched a few new SKUs, including into certain segments where we were originally expecting an extinction threat in that segment. So now our optical brighteners are able to service those applications as well. And we're working very tightly with our key accounts, our customers, to increase our wallet share. But we do debottleneck in anticipation of, and then over the next year work to see how we can increase our wallet share with them. So this was an ongoing activity. Even this year, we will be able to debottleneck the asset with marginal investment. And our goal is to ensure that we are increasing our wallet share because we have upstream integration and because we have strong value chain pieces that we're able to give to customers.
Thank you. Next question is from the line of Ankur from Axis Mutual Fund. Please go ahead.
Hi sir, Ankur from Axis Capital. Thanks for the opportunity. First question on the AI part. Your commentary suggests volume-led uptake across some of the segments wherein we are seeing some green shoots. My question is more on our thoughts and strategy, given that the pricing-led scenario is the way it is. Probably it will take some time for it to recover. So is there any enhancement in product specifications that we are doing to address the margin pressure, or there could be a reset in terms of AI margins over a medium term, as we scale up this business?
So in the AI business, the part which goes into dyes, pigments, and their associated industries, I think I had mentioned also in February that from the closing end of Q3 onwards, there has been an improvement. And that improvement was volume-led, and eventually it would turn into pricing improvement as well as margin improvement. So I think the volume improvement has persisted. There is now we're starting to see some level of margin improvement. Again, all of this is significantly influenced by geopolitics. So I'm cautiously optimistic, but we are seeing along the lines of what we had mentioned in February. Now, when it comes to other segments such as agrochemicals, for us, in a certain group of products which go into agrochemicals, we are seeing price as well as a margin as well as a volume improvement, but not in others. The other ones will come maybe towards the end of Q1 or Q2. I'm not sure, and hence I am not going to give any clarification with regards to the other chemical which goes into agrochemicals. What we have done in the meanwhile is we have seen how to ensure that we are optimizing on the cost front, how we are ensuring that we are able to even go downstream in partnership with certain customers, as well as ensure that there is a level of asset fungibility where we are able to use the same asset to drive production for intermediates which will go into other applications such as pharma and personal care.
Sure. That's helpful.
Revival, is fully realized, we will have more options than we did 1 or 2 years ago, because we will have more products commissioned across a broader range, as well as we will have gone downstream to be able to have greater security about the future of these assets.
Sure. And just a follow-up on that, within AI, is there any specific segment wherein the pricing or the competitive pressure is significantly higher, maybe fine specialty or basic chemicals, or even does that?
So pricing pressure, of course, is significant on products such as DASDA. And there is a pricing pressure on a couple of agrochemicals. In another couple of agrochemicals, the situation has been on an improving track. I wouldn't say that it is where I would like it to be or where it has been in the last few years, but it is on an improving track.
Okay, great. And just a second question on, our medium-term expansion into phenol acetone downstream. So there was a tech tie-up which I think was pending on the BTA side. So what's the status there? And, from a tech perspective, are we more or less done across the product range that we are looking at, or there is still more to go?
Sorry, what is BTS?
BTA.
Oh, bisphenol. BPA.
Yeah, bisphenol, yeah.
Yeah, so we're on I think we're at the final leg of concluding all that. The other licenses have already been tied up. Polycarbonates, as we mentioned earlier, we are in a unique position where the equipment, the license, the final product trademark, as well as our anchor customer all happen to be the same name, which gives us a great degree of confidence, not only in servicing the Indian requirement because of our because of our compounding facility that we've already put up, we've already started servicing the domestic market, as well as the anchor customer, which will be located in Europe and will continue to consume product that comes out of this plant. So I think we're well placed with India's growing demand as well as our anchor customers' expected demand.
Okay, that's it, Molik. Thank you and all the best.
Thank you.
Thank you. Next question is from the line of Abhijit Akela from Kotak Securities. Please go ahead.
Yeah, good afternoon. Thank you so much. Abhijit Akela here. So just a clarification on the government incentives. Number one, this was just for 10 years. How many more years does it continue for? And if I heard you correctly, you mentioned that there was some accumulation of the incentives this year. So for what period exactly has this 161 crore number been received?
Abhijit, I mentioned that accrual basis say 60 to 70 crores is the accrual every year. This is till December 28. Okay, but then you make further investment, you further qualify for this incentive. So when we are considering the larger projects, we fall into a mega project scheme, that the schemes are again better. And for such incentives and these things will continue there also. But on current results, if you are, this 161 is, what government does is that they release 80% and 20% is withheld till they do the final verification and certifies that. So that was completed last year. So we got current year as well as the accumulation of past year of 20%. But henceforth, it will be 60 to 70 crores on an accrual basis
for the existing investment.
Right. So is it, just to clarify, so is it fair to assume that out of this 160 crores, maybe 60 or 70 would have pertained to FY25 and the rest would have pertained to the previous years?
Yes, very fair.
Okay, got it, sir. Thank you so much.
As we make investments, they will have, obviously, they will have their own period of time. So that will be accrued separately because they will be separate investments.
Yes, sure. And I guess the commissioning for that would be basically from fiscal 28 onwards or thereabouts, right?
Yeah,
correct.
Correct. Okay, got it. Yeah, thank you so much. The other question I had was just on the normalized margin outlook. While I understand that for the next couple of quarters it's very difficult to hazard a guess, but when you're alluding to a more normalized level from a full year basis, is there some rough range you could point us to for the two segments regarding where margins could end up normalizing in each of them?
I think it is probably not the right time to be able to answer that. We believe that the normalized margins should be higher than what they are right now. Whether that happens in 1 quarter or 2 quarters or 3 quarters, I don't know. But we're confident about an annualized margin which is higher. So perhaps we see how the situation plays itself out, and there will be pockets of opportunity even in the short term, and it might look disproportionately higher than it should be. So I'll just hasten to say that it doesn't mean that Q1 and Q2 will be low and Q3 and Q4 will be high. And so we are positioned in a place where we are able to take opportunities, and those opportunities may be short or medium term in nature, they may be long term in nature. So we will remain agile, and we will always ensure that we are giving a high degree of transparency to investors.
Okay, understood. Thank you so much, sir, and wish you all the best.
Thank you.
Thank you. Next question is from the line of Vivek Rajmani from Morgan Stanley. Please go ahead.
Hi, sir. Thank you so much for the presentation. Just a couple of clarifications on phenols. I know last quarter was a difficult one because you'd mentioned the perfect storm. Given that you've been able to run the plants a lot better in this quarter, just wanted to get a sense of if we've been able to recoup the market share that we lost last quarter to imports and possibly increased it because we obviously expanded our capacities. And as an extension, I think you had mentioned that you will see some relief from the import pressures after March. Just wanted to get back to see if that has been happening as you were guiding in the previous quarter. Thank you.
Yeah. I mean, you are right in this, Vivek. Of course, we are not losing a market share remains intact. In fact, it's growing. We go on debottlenecking capacities, and those are, the market absorbs whatever we are selling. So we don't see any pressure on market share as such. As well as Q3 had some pressure on raw material pricing, but Q4. Q1 we are seeing, though Maulik has told me not to hazard guess, I am hazarding guess Q1 is much better for phenol as compared to Q4 because the raw material pricing, the cracks are going back to the level. I can say things are in place. We are able to sell in the market whatever volumes we are supplying to the market, and cracks are also getting improved cracks. So, and you see, whenever we talk about something, we'll have to see the Deepak Nitrite's product portfolio. Frankly, we are into domestic 83%. Domestic market is growing. Domestic market is stable, and though there will be some pressure here and there in one of the quarters, but overall, domestic markets are doing reasonably well. Export, we are facing pressure, maybe somewhere because of the export dynamics, what we are facing outside geopolitical situation. I mean, phenol and this, so far as domestically, we don't see much of a pressure on that, which is a larger section of our business. When we talk about AI and all these things, there also, if you see, we are doing, it's not that there is a pressure on product volumes or anything. It's only because of some concerns on this, but that is also now getting more or less getting in a stable situation now. It will further improve from here. I mean, whatever we have seen up till now, I think we have seen the bottom. All I can say, future looks very bright. Not that, and with all the commissioning in a phased manner, we are very confident we will go on because it's already done. I mean, nitric acid has already started. The CNA part of it. So with all these things, we see a very good next year from this onwards. So, and various steps are taken. These R&D, small things which Maulik was highlighting. But we must realize how are we differentiating our product, how the efficiencies are getting improved, how the like nitric acid question, the supply starts from pipeline. I mean, many things are done internally because the external environment remains external, but we are doing so many things here. So I see a good year, and next year will be further better because of steps what we are taking. I am not talking about the global uncertainty, what is happening, but by and large, things are in control from our side. We don't see much of an issue on running our plant operations and the commissioning of the plant. So I am very optimistic about this, though cautiously optimistic, that's the right word Maulik has used, but yes. And this year it should be better than last year because we have seen the bottom, which I feel.
No, I totally agree. One thing that we have learned from last year is that maybe we need to have a much sharper messaging about when we do our regular shutdowns for cleaning and maintenance. Because when we announced it, we announced also the period of time that we will have a shutdown as well as the fact that we would have inventory. But I think a lot of traders, because of the country's large dependence on Deepak, which has served them well, they anticipated for whatever reason that we may, extend our shutdown, or they wanted to de-risk themselves. So we had much more of an import coming in the end of October, early November to compensate for a perceived extended shutdown, which never actually took place. We were in fact able to start back up at a shorter notice along with larger asset available, capacity debottlenecking also. So our increased capacity came head to head with an increase in imports. I think maybe we can learn from this, improve our communication strategy that we put out to ensure that this kind of situation gets avoided, because at the end of the day, our customers just want to feel secure about the availability given the face of uncertainty in geopolitics.
Sure, sir, this is very clear. Thank you so much and all the very best.
Thank you.
Thank you. Next question is from the line of Arun Prasad from Avendus Spark. Please go ahead.
Thanks for the opportunity and good afternoon, everyone. So first, Maulik, just coming back to the technology part on our phenol polycarbonate integrated project. You said this phenol is in the final stages, but have you finalized for the new phenol acetone complex? Is it the technology licenses finalized, or we are just continuing with the existing one that we have?
I won't answer that question. I'll just say that it has been finalized.
Okay. All right. And also you said that from the polycarbonate project, the anchor customers' expected demand is very healthy. So can you indicate what percentage of our overall polycarbonate capacity this expected demand would be, the anchor demand would be?
I'm so sorry. I know I'm saying this a second time to the same gentleman. I won't answer that question as well. Frankly, that is part of the discussion that we are having. And if I answer that question, I'm giving away any leverage. So we are in conversations, and what we are telling strategic partners is that once we have commissioned, their interest in working with us is well noted, and we are happy to be their partner of choice because we're able to service them with technologically trademarked products. If they can help us debottleneck fast and further expand capacity quickly, then we will be able to service them faster. So leave us with that little bit of leverage for negotiation, but rest assured that our first priority is to ensure that anchor customers as well as the domestic market are both well served.
Okay, all right. So that's fine. On the compounding facility you spoke about, when do we get to see some kind of a revenue traction from this facility? Is it this year, next year? What stage we are in terms of? I know you mentioned that you have sent a feelers to the customers, but are we in a stage where we can confidently go and sell and book revenue in this? And what is our aspiration in the next 2-3 quarters or in the medium term?
No, so this is, just think of this as an R&D center. Now, it is able to make, in terms of the total throughput, much larger than what you would expect very often in an R&D center, sometimes even larger than a standalone plant. But it is still to be considered as an R&D center. We have generated revenues already. In the last year, we will extend that this year. But these are all to be considered as, in a chemical, what you would look at is a PO for a piloted product. So when you're talking to customers and you're scaling up your production in order to give them confidence that these are plant representative samples, right? And that's what they pay for. When you send them a lab sample, they don't pay for that. But when you send them a pilot sample, a larger volume, multiple SKUs, that they do pay for. But still, these would be considered, I would consider them as R&D projects to build customer confidence. Quick forward, as we're able to have them do their extended testing in multiple environments, temperature, conductivity, those other things, then they will expand into full-fledged business SKUs. So we've already started seeing value. We've already started engaging with customers. Long-term contracts, but these are still pilot projects. These are pilot projects.
Encouraging results.
Yes. We have.
The response what we have got from our customers is very encouraging. Product is getting acceptance. Frankly, this is field marketing, what we are doing, to ensure that when we come up with several plant on this, we are ready with this facility also on a larger scale, so that we again, back to that, we have integrated facility of compounding also. And the idea is that next several plants will be consumed captively rather than being product in the market.
And this is a change for our strategy, because the traditional thing that Deepak would do would just be to manufacture the resin and sell the resin. Now, while we will do that, we will also ensure that we are selling compounds which are made using that resin and other smaller raw materials, which have significantly higher price as well as margin, but have a significant approval cycle. So we are starting that approval cycle earlier, before the PC plant comes up, so that we can then reduce the amount of resin that we sell in the market and increase the amount of compound that we sell.
Typically, what is the approval cycle in months? Is it 24 months, 36 months?
For some products, it can go from 6 months to other products, things like medical devices and all that. It can go to even 36 months. There's obviously much, much higher value. And because of that, there is a very strict regulation and control. So I mean, we've been working with potential customers in multiple segments, including EVs, including switches, including furniture, as well as medical devices.
So what I understand is some of these approvals needs to also come from the customer's customer. Is it the right way to think? Because 36 months is too long.
No, it is not as long as. You see, we look at it from a different perspective. 36 months for something which is going to be around helping people in difficult situations where things cannot be repaired easily, and these will last with the consumers for decades. 36 months is a fair thing, and government, India as well as they've been very supportive. So I would not put too much worry into the fact that something takes 36 months. It takes it because it will be there as consistent business for decades to be.
Okay, understood. Finally, one question on our capital work in.
Sorry to interrupt, sir. Can you please move to the question queue for follow-up?
Sure. Thank you.
Thank you. Next question is from the line of Kumar Somaya from Ambit Capital. Please go ahead.
Hi, sir. Good afternoon. So just a couple of questions on the compounding facility. Is it the same capacity that we had indicated earlier, or has there been any change of plan?
It will be that capacity in a phased manner. Right now, it is smaller, but not significantly smaller.
Okay. And sir, any indication on what is the revenue that we have booked this fiscal from the compounding facility?
No, I won't answer that question right now because it depends on what products get accepted when the same customer expects maybe different SKUs for separate registration or approvals, those things. So we're working together with multiple customers and multiple segments. So it's too early to use on.
Sanjay sir, if you could just give us an indication, what is the cash capex for this fiscal?
This fiscal it won't be that high because we are almost at the verge of completion of all our earlier capexes. This should be in the range of 1,200 to 1,500 crores. Out of whatever we have announced at 8,500 plus the residual of the earlier. So out of around say 9,500 crores, our cash outflow this year should be around 1,500 crores.
Got it. Thank you, sir. That will be all. Thank you.
Thank you.
Thank you. Next question is from the line of Aditi Loharuka from ED Equisearch. Please go ahead.
Sir, I would like to know that how much is not so modest capex justified in the light of uncertainties in global trade in general and chemical industry in particular?
Sorry, I didn't understand the question. Could you repeat it, please?
A little louder, please.
Yeah, how much is not so modest capex justified in light of uncertainties in global trade in general and chemical industry in particular?
This capex justification, are you asking?
Yes, sir.
What I mentioned just now?
No, in general.
See, the point is, I don't know if you are asking about the capex, the approvals what we have got from the board about 8,500 capex. These are all well thought of strategy and well integrated business strategies, going backward, going forward, like compounding, like nitric acid, like polycarbonate. So, market remains the market what it is. But how resilient business you are creating is very relevant in this situation. If you answer the question on this, if we can answer it confidently, if we have that backward integration, forward integration, and all kind of efficiency in the place. So, capex justification in any case, this capex is going to take time. It's by December 27 will be ready. So, I don't see much of a problem in taking these capex decisions, whatever we have taken. I can understand if you are entering into some other, but these are all very well known thought of strategies what we are following.
I'll just add one point to that, and I say this with unequivocally. I think that Deepak Nitrite has the best investment thesis in the chemical industry in India.
Yeah.
Across the segments, across the company sizes, the investment thesis that Deepak has is attracting interest across the globe. So there's no question about the fact that we have made the right decisions. Now, sometimes you do have project delays, and those are regrettable. And we have to work hard to see how we can always keep on improving on those fronts. But if you're asking about why we're investing, what we're investing in, I think that you will have a remarkable resilience moving forward. And we are exactly where we need to be in order to take the best advantage of the geopolitical global situation. Yes, we have a large neighbor in China, but that does not change the fact that India has significant headroom to grow, and Deepak has made the right choices for investment.
At the right time also.
Yeah.
That's very important, at what point of time you are taking decisions. Delayed decisions do not help. If you have a strategy, then I think we are at the right time we have taken decision and the right execution philosophy we are following.
Okay. So, sir, what is your strategy to handle trade uncertainties in near term?
That's a whole separate question, and it cannot be answered over an investor con call. A strategy it involves working with our internal operations, it works with external customers, and it works to see how to make certain assets fungible to be able to apply to multiple applications. Beyond this point, trade uncertainty is a fact of life which we should be poised to take advantage of as well.
Okay, sir.
Thank you.
Thank you. Next question is from the line of Sanjay Kushawaha from an individual investor. Please go ahead.
Thanks for the opportunity. My question is, polycarbonate and BPA products comes from petrochemicals and may face more regulation in future. As the world moves to more greener and safer material, how are you planning to this transition?
To be honest, the world is moving towards greener solutions, and that is a wonderful thing that companies around the world are doing. But the interesting thing is that the products that will come out of these systems will be required to house these cleaner and greener processes. When you have an electric vehicle, the polycarbonate that is used to manufacture the electric vehicle and to house the battery of the electric vehicle is also as required as the source of the fuel. So let me just give you this kind of assurance that moving forward, products such as polycarbonates will have different end users, but will be just as much of interest to the downstream customers who are also engaging in improving their sustainability. So it will be a slightly different SKU, but the core product will remain the same and impart a different physical property based on the requirement. So we may not manufacture more internal combustion cars, and the polycarbonate resin that would be used for that compound will be the same polycarbonate resin which is used for a compound which makes an EV.
Thank you, sir.
Thank you.
Thank you. Next question is from the line of Hussain Parujawala from Carnelian Capital. Please go ahead.
Thanks for taking my question. Just one point. So after the debottlenecking, what is our capacity, we would say, on the phenol plant?
We've stopped. I think we should have stopped much earlier answering questions about capacity, because one thing that has happened is because of that, then you have licensors saying, oh, you know what, now if you're running into that capacity, please pay us license fees for that. So we are, we're consistently ensuring that we have the asset debottlenecked. Our focus is to ensure that we maintain and grow the domestic market share. So with the current capacity we will continue to find ways to optimize further. And we've also signed up for greenfield plant, because we are seeing that we will soon, not right now, but soon, maybe over the next 6-8 months, reach the kind of ceiling that we can expect from this asset. So we need to work quickly to see that we have corresponding greenfield asset which will service the polycarbonate asset as well as the market.
Got it. That's all the questions on my side. Thank you so much.
Thank you.
Thank you. Next question is from the line of Meet Vora from MK Global. Please go ahead.
Yeah, thanks for taking my questions. I had just two bookkeeping questions. First one is that what would be the accounting treatment for this government incentive income? Will we be doing this consistently on a cash basis or on an accrual basis? As you know, the 60-70 crores of income is more or less certain that we are planning to accrue every year going forward.
But I will leave something for me and auditors also, no? My auditor will question me if I answer you something here. We will take a call. I understand your dilemma, but we'll take a call. But let me talk to auditors also.
Sure, sir. And just secondly, on the interest cost every quarter or year that we can work with, as I see that there's been a debt increase to around 1,000 crores by the end of March this year. So if you can give some indication over there.
No, frankly, we have got 900 crores cash also lying with us. So net debt to debt is hardly anything. So, and frankly, this was borrowed to make sure that cash flows and this. And secondly, we putting pressure on our team also that we have our habit of borrowing had completely gone. So negotiating skill hai ki nahi? Are we getting the best rate? Are we getting the best opportunity? The 14 years payback, the term loan, and those things are tested here. In a smaller way. I can pay back this loan today also. I mean, there is hardly anything on the debt front. But this was more. We borrowed in a company where there was a new company what we started in GCTL. So this is what we have done. But frankly, I have no debt to pressure on the debt at all.
Correct, because gross interest cost ideally should be in sync with that 1,000 crores. So that's why I was asking. But understood your point. Okay, thanks. That's all from my side.
Also there it will be another income, right? So the net interest also will be hardly anything. And when it gets stabilized also, I mean there are several factors here. I think it's a bookkeeping question, I think.
Thank you. Next question is from the line of Arun Prasad from Avendus Spark. Please go ahead.
Thanks for the opportunity, follow-up opportunity. Sir, I was asking about the capital work in progress, 1,600 crores we have in our books as of March 25. So apart from the long-term projects, can you just help us understand what portion of this is getting commercialized in Q2 and Q3?
So all the projects what we had earlier announced for 2,200 crores are getting commissioned in the current year. This whatever balance will be whatever we are spending, say phenol technology or the polycarbonate technology, and this get spill over to the next years. But all earlier announcements are getting completed by this year.
So majority of the CWIP will be capitalized this year.
Yeah.
All right. Thank you very much.
Thank you. As there are no further questions from the participants, I now hand the conference over to management for closing comments.
Thank you all for joining this call. In case you have any further clarification to our team can answer that. Thanks once again for joining this call.
Thank you.
Thank you.
Thank you. On behalf of IIFL Capital Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.